you guys are getting ready for the holidays and having a safe and great holiday season. I know myself, I'm actually looking forward to actually starting to get ready for our holiday season starting today. So that's pretty exciting for me. Let me see who else is here this morning. I think Ryan's here. Good morning, Ryan.
Oh, happy Christmas.
Hey, good morning.
Oh, hey, Stelios is here too. Good morning.
Hello.
I think Steve is here. Good morning.
Steve. Sorry.
So is everybody ready for the Christmas holiday?
Just about. Picked up all my meat today from the butchers.
Oh, meat from the butchers. So what are you cooking?
It's probably more a case of what are we not cooking?
We over at our house, my wife, over the course of the last, the last 7 years or so, we've hosted over at our house. 3 years ago, we had 58 people at our house. We actually made a chow hall out of our main room of our house, and it was
how'd you find 58 chairs? That's my question.
We had to beg, borrow, and steal them from neighbors. It was
you have to turn them upside down. You get a leg each.
Anybody that had a folding chair, we grabbed. It was crazy. So yeah, we grabbed all. I mean, it was wild, but it was tough, and it was not fun. I'll admit it wasn't fun, because as a host, it's no fun. I mean, it just isn't. But we were supposed to have like 25 people over at our house, for Christmas to this week, but my wife passed those duties on to her father, because my wife's been too busy, like her business, and I attest, we've been basically gone every evening. So I have every evening just helping her with her business. So we finally just got out of that duty, which is nice. I'm excited to eat at somebody else's house this year. So you how many people are you cooking for, Ryan?
Just me.
All that food for just you. That's awesome.
No, there'll be four of us here, and then some people come. Brother-in-law, who lives just around the corner, coming over later in the day. But hoping to go swimming Christmas Day in the sea first time.
Oh wow! That sounds
it's a thing.
Riveting. That sounds really cool.
About 6 degrees, I think.
Oh my God, that's nuts. How about you, Stelios? Do you have people? Do you have people coming over?
We have some friends coming over tomorrow, and then the day after, Christmas Day as well. So it's going to be a little bit busy, but it's not going to be too many people. So it's going to be like 5-6 people at a time. So it's good.
Oh, well, that's fun.
Family and stuff as well. My brother's coming from London, so I'm very happy about that. Yeah, he's coming.
Nice.
Yeah,
that is nice, and I know sometimes you go visit him, not for the holidays, but that's cool that he's going to be home. That's cool.
Yeah.
Looking forward to some Omicron for Christmas.
Yeah, well, let's see. Yeah, let's hope
they're going to get tested. That's for sure.
It's interesting. Let's shift gears over to the market a little bit, and talk about where the S&P is at. I'm actually quite impressed with the move that we're seeing in the S&P back up towards the all-time highs. As you guys know, I've had this support zone drawn in the S&P for a long time. I mean, even before, when we were here, I look for a dip down to the support zone. The reason why it's a support zone is the breakout point here, the previous neckline of the inverted head and shoulder pattern that held as support. And even the next time around, we just this last week, we dipped to 45.50 and we held it, and we created a higher low. A lot of people attribute this rally in the S&P that we're seeing right now due to, Omicron not being, super deadly. I mean, yes, it's passing itself around, but it's not too deadly of a variant. So people are using that as an excuse to see, stocks move higher. But it's interesting, as we sit here and watch every central bank reduce liquidity, I'm surprised to see the equity markets as strong as they are. So what are you guys' thoughts as we're up here now? And also, I need to also mention that, liquidity is getting very poor at this stage in the game. So, are stocks up just because, there's just inflows of money right now and there's nobody standing in the way? Or what are you guys' thoughts here with stocks where they're at?
I personally think that people are looking at seasonality, and they think that 8 times out of 10 the next week is usually bullish, and maybe setting up for that. But really, it's very low liquidity, so I wouldn't be putting too much importance in today's move. But still, it's there. And again, if you put a gun to my head and tell me to trade the equity indices today, I'll probably buy them into next week. Simply because of seasonality and because things are light, and it's a kind of I find it to be a low probability scenario that we get any kind of big negative announcements this week, with the Christmas and all that.
Okay, but how about let's play the what if game. What if we had one of the I don't think it was a province, but it's a fairly large city in China shut down travel, and they're doing at home restrictions in this one city of China. Wuhan, I forget which I'm thinking that's the name, but I might have screwed that completely up. Anyway, what if we start to see China go into lockdown over the Christmas holidays? What do you? I mean, would your opinion change at that point?
That would remind us of early 2020. So yes, that would not be a good thing. As I said before, I think if the market kind of grinds higher, it's going to be a slow grind. If there's any kind of bad news like what you're saying, I think it's going to go a lot lower. So the risk reward is not good to be long, but I think it's the most likely scenario that we're going to grind a little bit higher. But like you said, if there is such an event, then that's that's not going to be good. So I think if you're long, you probably make 1. If you're short and something bad happens, you make 5 or you make 10. That's the problem with being long here. That's why I'm staying neutral.
Yeah. Okay. Well, I think it is a bit of a risk. All right. Well, Ryan, what are your thoughts here?
Yeah, pretty much the same as what you guys been saying. What Dale's saying, it's a difficult time of the year. You can't trust a move,
Yeah.
And with the China thing, yeah, they shut down, but they, like a lot of economies now, restrictions aren't the same as what they were in 2020. It may be like public transport in China's shutting down, but they'll still find a way to get manufacturing working because you don't have thousands of people in one post, if you like. And the same we've seen in the US and elsewhere, that manufacturing doesn't suffer so much from COVID restrictions because, as I say, people on an assembly line, for example, spaced apart, they can do the job fairly well. It's the services that takes the main brunt of it. If you're shutting down restaurants, hospitality, shops, that sort of thing, restricting retail sales, that's where it happens. But I think we especially with China and here, these moves are potentially going to be short-lived. Already the news today is, out the UK and last night that, yes, it's acknowledged that this Omicron variant isn't as severe as it maybe could have. And, that's a bit of a sense of relief there. We can see the pound, absolutely rocketing. But again, it's the time of the year. There's not a lot of liquidity. So, for stocks, it's the same thing. If there's positivity around, stocks are going to go up. It's BTFD, isn't it, all the time?
Yeah, right. Yeah, it's really it's poor liquidity, and that's the thing. I was warning people yesterday. If you're in the ForexAnalytix community, there's one of the things that you got to be really concerned with is if we see major key levels break, don't get in the way. Do not stand in the way. I mean, I use the example of like the dollar Canadian. We knew and we know that this 129.50 level is really big. Now, I'm going to use this as an example right at this moment in time, but remember I'm talking about today and really going into next week too. You see a move of this magnitude take us out of 130. I would not get in the way of that. we could be in a very, very, just a big squeeze because there's flows passing through the market that you don't know of. And, the only person that really knows, or the people that know, are the banks that are behind the move that are trying to get, these orders done. I used an example of a few years ago. It was, and I used this example last week, actually. It was during the holiday party that when I was at Gelos a few years ago, I think it was, I guess, Christmas of 2019, right around 2019, or maybe no. This is here's a good this is a good example of this is. I remember right around here. I remember wanting to be short, and I didn't get an order off. And I remember by the time I left, and I was flying home, the move in the Aussie. I mean, you can see this is a big move too. I mean, you talk about 72 cents all the way down to 70 cents, and then even further after that, following in the following week. I mean, that meltdown in the Aussie was enough to just crush so many people. And like I said, there was no real reason. It ended up being an awesome reversal at the beginning of the year, but that type of move, you just don't want to stand in front of it because you just don't know how much there is behind it. And how dominant can these flows be in your experience, Stelios and Ryan?
Well, just quickly on that move, that 2019 move was the yen flash crash, and it was Turkish lira versus Japanese yen that caused the damage, because there were a lot of carry traders in Japan playing that trade. And
this is 2018. I'm actually going back to. I need to go back to 2019. It'd be right.
2019, was it?
It was, and then here's. I mean, you could see just this is it. This all of end of December. You can see just the dollar Canadian, or the Aussie started ripping right into the beginning of the year, and then that happened. Then we saw the reversal at the beginning of January. That happened last year. That was 2018 back over here. I mean, but you can. The point is that you see so much. You can see so much like illiquidity right here that you just have to be careful, and don't use like correlations. I mean, that's dangerous, right? When you go, oh well, the Aussie's moving, so I might as well trade the same direction in the Kiwi. That doesn't necessarily work because we're talking about flows, not correlations.
Well, funny enough, I was going to pick up on the Aussie today because I've been looking at the options for next week, and the only currency that's got any decent sizing is
really quick before you explain this. I'm gonna take everybody over to the orders and options page that you like to put up here, and I'm gonna give everybody a little early Christmas gift. So go ahead, Ryan.
Yeah, so I was just having a look at next week to see how busy it is next week, because it's usually very quiet, and it is fairly quiet. But Aussie dollar's got a lot of interest. There's nearly 3 billion off on the 29th at a price of 70.30.
Wow!
I've looked through the other pairs, and there's a little bit off. 600 million off in Aussie yen. There's some 99 million off in pound Aussie.
Wait, did you say 3 billion near 70 cents?
2.88 billion.
Near 70 cents.
70.30 strike.
Oh, okay. So that's exactly 200 pips higher than or lower than where we're at right now.
Yeah, it's away, but it falls into what you've been saying about having seen Aussie a little bit bid. There's two things that stick out for me. A, that these expires on the 29th, which is value date the end of month. So it looks like corporate interest, if you ask me. It looks like there's been some hedging put on.
Yeah.
And I checked out these big expiries for Aussie dollar, and they were put on in August, July. You can see specifically the same amounts were put on, 5 or 6 trades. So it's potentially one person doing that. And the price of 70.30, that sounds like an accountant's price. It's most people go at the double O's or 50s if you're playing a speculative trade. But when you get something like 70.30 and a sort of oddish number, that sounds like a potential hedge. So corporate hedging, and the fact that all these Aussie pairs have something rolling off on the 29th, value date at the end of the month, also adds to the fact that it could be corporate interest. So on that basis, for next week going into end of month, keep an eye on Aussie dollar, because if there's any sort of last minute hedging to do, whoever's on the other side of the option has to, get themselves out of the position if they haven't already. It just means there could be some heavy corporate interest in a thin market for Aussie dollar. So that's one to look at. Like you say, and as the chart showed, you might see some spikes higher. It's already well bid today for no apparent reason. Keep an eye on that for next week if you're about trading, or if you're not in a pub.
So if there's options expiring, 200 pips below the market, you don't feel like it's going to be a magnet. It's going to be, whoever wrote that is going to have to exit it.
Yeah, exactly. And, you'd think that whoever's the broker on the other side is going to be hedged already. And, if let's say it is a corporate and they put those hedges on back in August, July, if they're getting better prices now, they could roll off worthless because they don't need them, because they did their business at better levels. But you never know. It's, things like that stick out in my mind. And I don't think the price is going to suddenly plummet to 70.30 just for the options. But what it does say is there's potential corporate interest there. If there's stuff still left to be done, because some of these clowns leave it to the last minute, look at the fixes, keep an eye on. If you suddenly see Aussie reacting sharply at any particular time on the 29th, you've had the heads up. Forewarned is forearmed, as we say.
All right. Well, technically, I'll say that, and if you guys follow like our patterns in play, I was looking for the Aussie from the 70 cent level to eventually make it to 75 cents. I pulled the plug early just because, the market's getting too thin, and, I wanted to just be done with it for now as we were up and kind of rejecting this 38% retracement. But, we have a 50% retracement around here, around 72.70, 72.75. Also, the 127% extension of the last move lower also comes in just above 72.60. So I would think that this area provides a lot of resistance into the next, couple of days. And really, if we can squeeze past that, I mean, we're talking about, making a move back up towards the 200-day moving average, which is near the 75 cent level. So just something that you guys should be paying attention to, some big levels of interest here on the way back up if the Aussie continues to move higher. One of the things I want to, warn you guys about getting too bearish the dollar is just remember the dollar is in a really, we're in a strong uptrend. We're developing a pennant here. So before you guys want to get too bearish, the dollar, just keep in mind what's transpired. And also remember, we're at the end of 2021. The end of 2020, we were right here. And everybody was predicting that the dollar was going to be a lot lower in 2021. And here we are at the highs of the day. Every bank thought we were going to be lower at this time last year. Every bank, what's really interesting is, the 2021 or 2021 analyst predictions are less aggressive than they were last year. Everybody last year was so bearish the dollar. So, here we are at the end of the year and we're at the highs of the year in the dollar index. I still think the dollar index has some upside left in it. We are bouncing off a triangle support. And remember, we do have inflation data today. So, I think this data is probably, as I told you guys, the whole reason why I'm here right now. And I know you all are too. This is the most important data of the week. And it's Christmas Eve of Christmas Eve. So, I think people are going to be watching this inflation data carefully. I think the market is preparing for a stronger. Let's go back over. Let's go over here to calendar. Everybody's expecting a stronger PCE data today. Let's see. Let me pull this up really fast here. There's data flash so you guys can see it. So, you can see some of the data that we looked at for the last, for the last reads, but people are expecting, stronger inflation today. And, the risk would be here that inflation comes in a little bit less than expected. And, the stock market spikes to new all-time highs. The S&P rises to new all-time highs. But what are you guys thinking out of the PCE, personal income, personal spending, durable goods data today? Anything? And we also have Canadian GDP on top of that.
I think the inflation data is the important one, like you said. And I think I've said this a few days ago. I think now the risk is becoming, in terms of market moves, to see more movement when there's a weak number. So now that everybody's kind of expecting, yes, inflation's high, is going to stay high for years. We were talking about inflation not being transitory months ago, but now things are starting slowly to stabilize. So I think the risk for a weaker number is bigger, and a weaker number is going to bring a much bigger reaction than
what's the reaction in the S&P going to be?
The new normal. If it's a weak number, the S&P goes higher because the Fed's going to say, yeah, we might not hike 3 times. We might take it a bit slower with the taper or something like that. Not straight away necessarily, but, it might lay the foundation, 2-3 months down the road if things continue the same way. But, I think the risk is now for a bigger reaction on a weak number.
Okay. And Ryan, do you have any thoughts there?
No, I'm pretty much in agreement with Stelios. No one's going to give a monkeys about building permits. Probably won't care about durables. We saw, just off the top of my head, still probably correct me, inflation dipped back a bit, didn't it, in the last read, the CPI numbers?
CPI or the core PC? Core PCs today. CPI.
CPI. I think it dipped back a tiny bit, didn't it? 6.9 from whatever it was.
6.8, right?
I think it was just down a couple of pips from what it was before.
You might be right. Actually, I don't remember exactly off the top of my head.
So if this follows the same sort of theme, it might not be as strong as maybe the expectations are looking at.
All right. Well, let's see what we get. I think Steve is here. Steve, do you have any opinion on the data that's coming out today?
I can't make predictions, of course. The only thing I can tell you for sure is no matter how the data today comes, after having seen data for 11 months, it is unquestionable that the yearly inflation is going to be roughly at 7%, which is an unbelievable number. We have to go back. We only have a very, very few number of examples of years like this, and you have to go back to the inflation decade of the 70s to find such numbers. So in the grand scheme of things, I don't think that 1 month's data is going to play any role. Now, obviously, I agree with what Stelios said. Weaker data, weaker inflation data. I mean, if we get that, it's going to be a positive signal for market participants. They will be able to hope that the Fed is going to turn less hawkish. Higher inflation data can spook the market that the Fed is going to at least go through with whatever the market is pricing in, perhaps even more. Now, the other question is what happens if we get data out of expectations one way or another? Probably we're going to see an exacerbated move due to lack of liquidity. So people need to really be careful, taking positions today.
Yeah, that's for sure. And I've been kind of scalping around the last couple of days, really like yesterday. And I told everybody in the ForexAnalytix community. And by the way, if you guys don't know that, we do webinars after this we do the morning edge where we do all of our analysis for the individual instruments, and Steve and Stelios actually end up covering a lot of other instruments after that, like a lot of individual stocks. And then, we have the daily roundup and European crossover. So there's other webinars that we do throughout the day that's only for our community. But what I was telling everybody yesterday is I'm trading about 1/4 size that I normally am. So, I like to use fractions when I'm talking about position size, because I think, we're all different. I mean, you guys are at home, you guys and gals are at home, or you're at your offices and you're trading much different size than I am. I might be trading, let's say, 400,000 in currency, and you might be trading, 50,000 in currency, or 100,000 in currency, or maybe 10,000 in currency, or maybe 1 million in currency, maybe 2 million in currency. So we're all trading different sizes. So I can't say, well, you should, I always just kind of think whatever your baseline is, like whatever you're most comfortable with, I would call like a, full size position. Then, like what I've been doing over the last couple of days is trading 1/4 of that. So if I'm normally trading, let's just say, 1 million in currency, I'm only trading 250,000 in currency, because you want to pare back your sizes during times that are like this, where it's extremely illiquid. And also one other thing I should give as a piece of advice really quick before the data does come out, which we're going to, actually, I'm going to monitor 2 different markets really quick. And by the way, we have Canadian GDP. So I'm going to put the Canadian dollar up here. Damn, I did not want to do that. Did not want to just grab that fib. I did that on accident. That 78% retracement right here is holding. What I was going to say is, just remember, if you guys are in like any negative position, don't let it get too negative, because the reason why I say that is because the problem that you have is trying to make back. If you're in a loss and you're like, dude, I just get out, because trying to make that back in a very illiquid market is going to be very, very hard to do. Wouldn't you guys agree with that?
Absolutely.
Yeah.
And in general, hope for the best is not a trading strategy.
No, and we're, I'm just, by the way, I'm going to keep the dollar yen up, just because we're 114.37, just so you guys know, is a 618 retracement. So we break above these highs in the dollar yen, and that's actually a pretty bullish sign. And we should be trading back at 115, just FYI. And I'm going to keep the dollar Canadian over here, because we do have Canadian GDP data being released. How much time do we got?
Okay,
two
any
seconds,
second
2
now.
seconds.
Yeah, wow. Okay, here we go.
Oh,
There we go.
durable goods is stronger.
Okay.
Initial jobless claims exactly as expected, 205.
Core PCE not out yet. That's the main one. I don't see it. Oh, there we go. 4.7. There you go. That's stronger. What's the
Wow.
market doing? Not much.
Not a whole lot. I mean, the S&Ps have come off a little bit, just like a tick, and
No.
dollar
Canadian
Canadian's
GDP
not moving.
in line.
It's in line with Canadian GDP. Whoops, I probably could have pulled that up a little bit. Oh, we could have done this. There we go.
A little bit of a revision higher to the previous monthly number of Canadian GDP to 0.2 from 0.1.
Yes,
and a revision higher to the previous PCE. So not only PCE was a little bit stronger than expected for this month, but we revised higher the previous month's PCE from 0.4 to 0.5 as well.
Market's not doing anything.
What's interesting is, people are so worried about like this COVID variant and, talking about it and blah, blah, blah. The fact of the matter is, and the thing we have to be most concerned with moving forward is we have to be most concerned with central banks just removing liquidity at a very fast pace and a faster pace than everyone expects. And it's not just the Federal Reserve. It's every central bank. Even the European Central Bank is becoming more hawkish. And, that in itself, I think we have to pay really close attention to. So, and I think that's going to be the driver that not necessarily this week is just going into, and not next week either, just going into 2022. I think that's what we're going to have to be watching is, how tight do the central banks get, going into next year? And with that being said, guys, it is Christmas Eve, the eve of Christmas Eve, and I am going to finally go wrap some gifts. I managed to wrap like a quarter of the gifts yesterday. I'm going to go try to wrap that up before my kids wake up today.
Should be an expert at that now after the last week.
Yeah, no, the funny thing is for those of you that don't know, my wife has a retail business. It's called Birdie Tell, and she just cut off shipping today, so that no one can ship between now. If you guys want to see her business, I just kind of show you really quick. This is she's had this business for years. Most of you guys know this is all local gifts, right? And you can build your own gift box of local goods. People make here in Arizona, whatever. She's like the anti-Amazon, if you will. Anyway, her business has been really busy, but the thing is, it's easy. It's actually you box up gifts and then you ship them, right? So it's boxing it up. It's not like actually wrapping. Wrapping's difficult. It's difficult. You got to make things pretty, put a bow on it, stuff like that. And if you don't, then your wife comes down on you for making your gifts ugly. So they've got to be pretty, right?
Yeah,
so I think it's difficult. Yeah. I'm going to go drink a couple beers. I know it's only 6 o'clock in the morning here, but I think I'll drink a few beers and I'm going to find it a little bit easier to wrap gifts this morning. What do you guys say?
It's never too early this time of year.
All right, maybe some eggnog. All right, forget the beer. Maybe some eggnog. Anyway, hey, I just want to say, for those, we'll be around next week. This ForexAnalytix is going off air from here on out until we'll be, some of us will be in the chat room. I'll be in and out of the chat rooms today, but we'll be pretty much out for the remainder of the week. But we'll be back next week. So I want to wish everybody here a, Merry Christmas and happy holidays if you don't celebrate Christmas, and hope you have a wonderful time with your family and friends. And if it's just you, I hope you have a safe one and a good one.
Yeah, I'd just like to echo that as well. Yeah, thank you to all our people who turn up for these webinars. The support's fantastic, and we all appreciate it here. And shame Dale couldn't be on to say Happy Christmas, but I'm sure he'll send his best wishes to you guys as well. And we'll see you soon. Yeah, I think Dale is screaming Feliz Navidad from the rooftops just a little while ago, but he could not get in. So hopefully you guys, he does wish you all a Merry Christmas.
Same wishes for me, and thank you very much for supporting us. And I see a few Greeks here on F.A.C.E, which is good. We should do like a F.A.C.E Athens get together or something. We'll see. Yeah,
you guys should do a Greek meetup. Everybody go eat some. What I wouldn't give for some souvlaki right now.
Oh yeah. Thank you, everybody.
All right, Steve, have a great one. Merry Christmas to you and your family.
Merry Christmas to all of you.
Stelios, Ryan, and everybody listening in.
Have a good one.